You are listening to chartingwealth.com for Thursday, the 21st of January, 2016. Well, let's check out what's going on in the markets. We always start with IYY. Yesterday, the market was down. The total market, which is what IYY represents, 0.96%, almost a full percent. Look at those down candles. Those who are watching, those of you who are listening, I can tell you what we are seeing. 1, 2, 3, 4, 5, 6, 7 down 2-day candles, representing 14 days or so of down movement. Heck, you can add in the candle on the 5th, which was a down candle also. I'm just talking about connecting my 2-day trend line going down. Strong down movement in the market since the beginning of the year. Of course, those of you who follow the markets with us know that our 2-day chart had rotated over back on the 4th of December. It wasn't like we weren't in a downtrend for a good month before the 4th of January when the markets opened back up again. That's part of the benefit of being able to read a stock chart, isn't it? That you're paying attention to what the charts are telling you, not what the talking heads on TV and in the media are saying. Now let's drop back, as we always do, from our 2-day chart to our 4-hour. What do we see with the total market? Still well below our 2-day trend line. Lots of down movement yesterday in the morning. A little bit of up movement in the afternoon, but all that up movement was captured in the down movement, making for a 0.96 drop instead of a 2 or 3% drop that it could have been. So that is where we are in the total market. We're going to go back to our 2-day chart, and we will take a look at SPY. Now, what is SPY? Well, that's the Standard & Poor 500. It's actually down 1.28%, so about 1.5 times what the total market was. It did open originally a little higher, but then ended up closing, and we're going to have to redraw our trend line just a little bit, but closed down substantially yesterday, again continuing that downtrend, lots of down movement. Again, that market also, that basket of stocks, that index, rolled over around the 2nd of December going down. So no surprises in continued down movement, but it was surprising how vast the down movements were. But again, our job as far as reading charts go is not to force the market to go anywhere, because of course we can't do that, but to follow what's happening. And the beautiful thing about reading a chart is it does give you, it actually gives you the ability to roadmap in many, many instances what's going on by using your indicators. And here we use our MACD and we use our derivative oscillator. We also use our candlesticks that chart the price movement, and we use things like the exponential moving average, moving linear regression lines. Those kinds of things help us, along with our Bollinger Bands, which are nothing but volatility bands, and you can see lots of volatility from these drops. So that's why we chart the market. It helps a lot, and the better you get at it, the better it helps. And we can still see the same kind of movement. We had a lot of movement in the morning on the 20th, and some up movement in the afternoon, and that's the way that shook out in the Standard & Poor 500. Now let's look at our last index before we get to gold. Go back to our 2-day chart and go to the Qs. The technology stocks were not down as much as the S&P, not hardly. They were down for the day 0.31%. And again, same kind of moves down, same kind of crossover back in December that we saw on our 2-day chart. And if we revert to our 4-hour chart, what do we see? Well, we see a spinning top at the end of the day. Now, what does that necessarily mean? Well, that typically means that we've got some indecision. It's a green spinning top, indecision on upward movement. Was a lot of upward movement during the afternoon and downward movement, but settled out again with a down market, but not as much downward movement. Now, we are, as we mentioned in our weekly review and forecast a couple of days ago, because the week only started on Tuesday with the Martin Luther King holiday, we mentioned to you that we are in earnings season, so we may see some earnings effects from how companies are doing as far as maybe giving us some potentials for up moves in the market, even with all this downward pressure. We'll continue to watch. Remember, everything that does go down when it comes to indexes eventually goes up. A derivative oscillator has rotated over on our Qs, or the NASDAQ 100, which is what it represents, but we still don't have a crossover on our MACD. When we do have a crossover on our short chart, we want to see how that plays out, and when and if probably it rolls back over, that's when we can find a time to safely get in on this downward movement. Okay, that is where we are on all of our indexes. Now we're going to go back to our 2-day chart, and we're going to take a look at gold. What is gold doing? Well, gold is continuing to move up. It had slid sideways a few days after it violated the 2-day trend line, and gold has now started to advance and continue its upward march. The gold rotated over back on the 16th of December, but what it really did was slide sideways and touch one or two more times the what we had charted as being the bottom on gold, somewhere around $100.50 a share, something like that. And then gold took back off again and started moving up. Now, those of you who want to own physical gold, you can, of course, do that, but it's so easy to buy and sell gold on GLD. And again, we're talking about here learning how to trade gold based upon being able to read a stock chart. And I'm telling you, gold is trackable. In fact, when we look at our 4-hour chart and you go back in time and see how accurate it has been for us, it's been amazing. Started working again. It stopped working for a little while, and if you've listened, you remember in December when gold started sliding sideways, didn't work so well for us, but gold has gotten better since it started actually moving again. The MACD is a wonderful indicator in markets that are trending, that are moving, but when markets start sliding sideways, the MACD becomes difficult and edgy. However, once it started moving again, we saw on the 4th of January a good crossover going up on the 4-hour chart, started working for us. We saw it crossover going down, worked for us there, and now it's crossed back over going up, and it is of course above the 2-day trend line at this point, crossed over, and we'll see if gold continues to be trackable. And of course, as the markets crash and money rushes other places, gold can be one of those places. So we'll continue to monitor it. Gold technically was up 1.34% for the day. You can see how it bumped up, or those of you who are watching, those listening, it bumped up in the morning and then again in the afternoon, open green candles, which is a good sign for gold's movement up being continued. Folks, that's where we ended the markets on the 20th of January as we go into the day on the 21st. Hope that you've had a good shortened week so far. And again, remember, everything we give you here, we are not a stock calling service. We don't charge for this service. We are an education firm. This is all about teaching you to do virtual trades and open a virtual account, start using your virtual money, figuring out how to actually trade, making your own decisions, and then once you become competent in that in your own mind, have done it well for a while, then you can make your own independent decisions about what to do. Thank you so much for listening. We always love to hear from you. Follow us on Facebook, Twitter, Instagram, YouTube, you name it. We are there. We are here for you. Hope that you have a great day and a great week. God bless from chartingwealth.com.